What's going on, traders? We got a lot to talk about. We're going to talk about the SPY, triple Qs, what institutions are doing when it comes to the SPY, and then, of course, we got to go over semiconductors. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now, we're looking at the SPY daily time frame, and this morning, we got cooler than expected CPI data. Now, one thing I warned to you guys in the last video is that you probably should not get a lot of contracts trading into this type of news. Well, why was I saying that? Well, when you have big moves like this, retail traders tend to get desperate, right? They get desperate. They start looking for a bottom. You don't believe me? I mean, go on YouTube, go go on Twitter, go on Reddit, whatever the case may be. Everyone is looking for the bottom. They're chasing for the bottom. They're hoping that the bottom is in or near, and they get desperate. Right. So when you have a big move like this and then you have CPI data come in cooler than expected, traders are going to flock in, they're going to FOMO in, they're going to jump into calls, right? And then you get trapped. And so, one thing I want you guys to do is start thinking in a way like institutions, right? Start thinking on how you can trap retail traders if you were an institution, right? Just start thinking like that. The more you think like that, the better, the more logical you start thinking when it comes to trading, right? So, you know that retail traders are desperate. They're looking to FOMO in. They're looking for any type of good news. We just made a massive move to the downside. So in the back of your mind, you're like, at some point in time, we got to get a dead cat bounce. We got to get a rip your face off rally. We got to start heading back towards all time highs. What's the best way to do that? Let's put out some good news, right? Boom, you get trapped. You pump all the way to 564 on the SPY, and then you give it all back, and you head all the way back down to 555, and then you pretty much go back to where you started. Okay, which is around 558, 560 on the SPY. And so, as long as we stay below 564 on the SPY, I still remain bearish. Even if we get above 564, we'll talk about that if and when that happens. I'm still going to lean bearish. Okay, plain and simple. Now, what's important to note here is where we are when it comes to the SPY. We're still in very illiquid territory. Not only that, but we are still below these guys right here. This is why 564 is very significant. Right here, you got a lot of turbulence here. And then even over here, right, you go over here, you got a lot of turbulence here. And we failed to break above these guys today. We tried this morning because of CPI data, but bears continue to hold us down. So I imagine if we were looking at a dead cat bounce or a rip your face off rally, if anything was going to do that, it would have been CPI data. And maybe we're waiting on more data. Who knows? But I would have thought that once we got above 564, we would have held. But 30 minutes after open, and this is why I tell you guys all the time, wait 30 minutes after news and wait for the market to digest the news, because more than likely it ends up being a trap. Okay, I always say this, okay? So hopefully somebody out there listen. But regardless, you're still below 564. You're still below these guys. It's not looking good for the bulls. Now, we do have more data coming in. Of course, things can change. But as long as we stay within this area, in this liquid area, very liquid area, it's looking like we could see a move towards 540, minimum 550. All right. Now, what are institutions doing when it comes to the SPY? Well, we look at quant data, and this is crazy. Okay, this is absolutely crazy, right? And so we look at quant data. Link will be in the description below if you want access to this type of information. And they're loading up puts on the SPY, and they're loading up a lot of puts on the SPY, guys. So specifically, we're looking at. Let me click on the right one here. Bear with me. So specifically, we're looking at 550 puts, all right? So as you guys can see, these were loaded up today, March 12th, today, right? At around 11:37 Eastern time, which is my time. You scroll over, you see the SPY, March 21st, 550 strike puts. You scroll over, you see they were loaded up at 557.9. And then you got the quantity. Quantity is pretty insane. And then you got some at the ask, you got some above the ask. And then you see the premiums right here. I mean, the premiums are insane. You got 13 million, 2 million, 86K, 65K, 65K. It doesn't stop there. Okay. It doesn't stop there. In case you're wondering, like, okay, it's not too bad. We go here. We click on this spike right here. I mean, the list keeps going, guys. So we scroll back over, right? They loaded up more 550 puts. Okay, 550 puts, expiration March 21st. They were loaded up at around 557.8. As you guys can see, the quantity, they were all at the ask. And then the premiums 400K, 100K, 100K, so on and so forth. I mean, it just keeps going. Here, oh yeah, it keeps going. Okay, it keeps going, right? We click on this spike here. I believe this is the last one. It might be more, but yeah, we're just going to do this last one here. Again, March 21st, right? This was like 10 minutes after the previous ones, right? So March 21st expiration 550 strike, right? They were loaded up at around 558. When SPY was around 558, you got them at the ask premium 200K, 100K, and then you got your various exchanges over here. I encourage you guys to actually Google these guys because I know a lot of you doubt that these are actual institutions or exchanges. These guys are big. Okay, these are big names. A lot of them are located in New York. All right. So, what's located in New York? The stock exchange. So look these guys up, guys. Feel free to Google them, screenshot, do what you got to do. Don't take my word for it. Do your own research, okay? But again, that is what institutions are doing when it comes to the SPY. They are loading up a boatload of SPY puts, okay, for 550 strike. They're loading up more at around 529. I'm not seeing 529 right now. It could simply be a hedge or it could be just a cheap position they're getting in. We'll talk about that if we ever get close to that target. But right now, I'm looking at a potential move towards 540 as long as we stay below these guys right here at 564. Now, what would it take for me to start being bullish? It would take a lot. Okay, it will take a lot. I mean, mainly I want to see a move above 590. We're far from that. Okay, we're really far from that. So until we get above 590, it's really hard for me to start leaning bullish, start screaming all-time highs, start really going crazy for the upside. As long as we stay below these key levels, or ultimately 590, I got nothing for you when it comes to the upside. All right. So that's what I'm looking at when it comes to the SPY. We look at the triple Qs. Pretty much the same thing with the triple Qs. Now, one thing you want to see with the triple Qs is you want to see 569 hold, right? Pretty far off. Where we closed it, not 569. I'm sorry, 469. Pretty far off from that. We're at 476. We closed it around 476. So I would say we're pretty safe here, right? We're somewhat safe here if you want to be bullish, and there's very much potential for us to break higher. But one thing we saw this morning is that we were having a hard time getting above 480. So obviously 480 is your key level when it comes to the triple Qs, guys. All right, so you definitely want to keep that level in mind. We kept rejecting it. Let's actually go to the 4-hour time frame so you guys can get a better idea on what we were doing this morning. But yeah, CPI data came in cooler than expected. We kept trying to break above 480. We did it a few times, but again, cocaine bears, they stepped in, they broke us down. All right. We just could not get above 480. Could we be waiting on more data? Sure. Okay. Absolutely. But right now, bears are still in control. There's no reason to start being bullish. There's no reason to start screaming a rip your face off rally is coming soon, anything like that. Bears are still in control, and they showed us that they are still in control today. If bulls wanted to step in, CPI would have been the opportunity to step in. Still did. All right, so 469. We go to back to the daily time frame here. 469. You break below 469. Okay. You break below 469. Okay, there's a lot of things I don't want to see in life. Okay. One of them, your grandma in the nude. Don't want to see that. Okay, don't want to see that. Another one, a Diddy party. Don't want to see that. My third thing I don't want to see in life is the triple Qs get below 469. You are so illiquid towards 450. It's not even funny. Okay. You can drop really, really fast. Okay. So you don't want to see this happen if you're bullish on the market. If you're looking for a bottom or anything like that, you don't want to see 469 get broken and held. It gets ugly. All right. So if that happens, you open the floodgates all the way towards the 450s, at minimum 460. All right. So you don't want to see that happen when it comes to triple Qs. Upside, we already talked about it. 480. You get above 480, you're looking at 484, 485, right where these guys are. So you see a rejection here. You see a rejection here. Zoom in a little bit. Rejection here, rejection here, rejection here, so on and so forth. So you want to get above these guys, and then we can start talking about some decent upside from there. You're definitely going to see some decent upside if you manage to get back above 485 on the triple Qs. Um, I want to talk about Bitcoin real quick. So Bitcoin is interesting. I will say that much. You have an inverse head and shoulders pattern here. That's a good sign, I guess, for the market. But it's really weird that Bitcoin. I mean, we saw Bitcoin attempt to break out of the neckline here this morning off of CPI data, but it just gave it all back. So something to watch. We are consolidating. The bigger the consolidation for a head and shoulders pattern, the bigger the move towards the upside. But in case you don't believe me here, let me actually mark it out for you guys. You got your head here, right? What am I doing? Shoulder here, another shoulder here. Okay, so it's looking good. You could see a nice little breakout towards about 87, 88K. Max I'm looking at is about 90K, but from there I still think Bitcoin is cooked. Okay, still think it's cooked. Still think you're going to see downside. I still think 73K is on the table. I just think they're stalling. If anything, we're just retesting the symmetrical triangle. Yes, this is a symmetrical triangle. I just don't have the upwards trend drawn out, but there you go. So that could be the potential move we're looking at, where we just simply retest the symmetrical triangle and then we do it all over again. Okay, we start tanking all over again. So that's what I'm looking at for Bitcoin. Again, I'm just not bullish on this thing. I think it has a lot more downside potential to go. We'll have to wait and see. All right. And if we're talking about a leading indicator, this could be a good sign. If this head inverse head and shoulders pattern actually plays out, it could be a good sign that we may get one more day or two of pumping. But ultimately, I think the market is going to see a lot more downside. We'll see. All right. Semiconductor ETFs. All right. So lock in here. SMH. Right now, we're just trading in the supply and demand zone when it comes to SMH. You're still creating lower highs, lower lows. I mean, you got your high here, lower 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 lows. And today you probably ended up making another lower low. What would it take for me to be bullish? Well, obviously, you need to make a higher high here at this point. So you want to get above 226, 227, we'll say. And ultimately, until SMH gets above 235, I'm not bullish on the market. Okay, so I want to see semiconductor ETFs follow along. If we do break those key levels that we talked about when it comes to the SPY, triple Q, so on and so forth, I want to see semiconductors follow along. If they're not following, 9 times out of 10, it's a trap, guys. All right, so you want to pay attention to semiconductor ETFs. Um, as far as downside goes, I still think 204 is on the table here. It's really going to be hard to change my mind here. Um, yeah, 204 still on the table. I still think we're heading towards this trend at around 204. Bulls are very much present here. When we get here, if some way somehow, let's actually go to the weekly time frame. If some way somehow, guys, okay, if some way somehow you manage to break below these guys and you stop these guys at their position, pack your bags. It's about to get ugly. You're gonna see the ugliest drop known to man outside of COVID. Okay, you these guys. There's no way these guys don't step in. There's no way. I will find it so hard to believe. I will genuinely be shocked if these guys don't step in. If these bulls right here, I tell you guys about price action, I show you guys where bulls and bears are every single time. These bulls right here, they don't step in when we get to 204. If we get to 204, um, pack your bags, okay? Pack your bags. You're so illiquid. You're so illiquid. You're looking at you just open the gates towards 170 at that point. You break below 200 on SMH. I would say, actually, I would say about 196, 197. You open the floodgates to some insane levels. You're talking about 170, 160s. I mean, it gets really bad, okay? And obviously that's bad for Nvidia. So you don't want to see that. I don't think it's going to happen at least anytime soon, maybe later on down the line. I think we get a legit bounce from there. They'll probably signal a bottom or something like that. But yeah, yeah, you definitely don't want to see this. Okay, so definitely pay attention to this. If you don't mark anything else on your charts, definitely mark this level here on SMH. I do think we're going to head there. It's just a matter of when. SOXX. Another semiconductor ETF, you're looking at the weekly time frame. Again, you don't want to break below these guys right here. Here and here. Okay. Bulls here, bulls here. You break below these guys, again, you get very, very liquid. You break below what is this actually? You break below 193 on SOXX, yeah, pack up. Okay, you're looking at a move towards 180. You get below 180 on SOXX, you're very illiquid towards 160s, 170s. So you don't want to see that. Okay, you don't want to see that if you're bullish on the market. It's also important to note that you are continuing to make lower highs on the weekly time frame. You got a high here, lower high here. You're making your lower low right now here. So yeah, not looking good for semiconductors. If anything, we may get a little bit more upside, possibly towards 203, 205, and then from there you reject. Um, I said 235 for SMH, 210, okay, for SOXX. You get above 210, we can start talking about some rally, rip your face off rally, all that fun stuff. Until then, still bearish on the overall market. Nvidia. Now this is interesting. Nvidia is at a crazy spot right now. Very interesting spot. So you bounced here, right? You bounced here. You bounced here, right? You're at a wall right now. Can we see a little bit more upside? Yes, we could see a move towards 120. We see a move towards 120 and 120, maybe 122 max, and reject from there. Okay. Yeah, you still have not played this rising wedge out at all. It's like you're not even close. Okay, 100 still on the table. Once again, I said this in the last video. You break below 103 on Nvidia, the floodgates open to the low 90s. 103. Mark it, screenshot it, do what you gotta do, replay it. 103. You mark that level on your charts because if the video gets below 103, you open up the gates to between 94, 96, possibly even lower than that. If we're talking about the measured move here for this rising wedge, all right, you measure the open, you measure the close of this, you bring it to the breaking point, the original breaking point, because sometimes patterns have like multiple breaking points, right? You're looking at a move towards 60 on Nvidia. Now, before you go crazy and you're like, oh, there's no way Nvidia can go towards 60. 60 was 600 pre-split. I'm just saying. That was 600. It's very much possible. Okay. Do I think it's gonna happen? No. Would I be surprised it happens? No. But again, I don't think it's gonna happen anytime soon for sure. That would be insane. I couldn't imagine a world where Nvidia is at 60. But the market doesn't care about my imagination in my world. All right. So we'll see. Okay. But other than that, Nvidia still has more downside. It's also important to note you have three black crows here. Three black crows. All right. So something to look out for. Okay. And that's pretty much all I have for Nvidia. In order for me to be really bullish on Nvidia, I mean, you guys know what I'm about to say. 140. Okay, 140. All right, it's pretty far away. And just because I'm talking about targets that's far away, it doesn't mean not gonna trade the upside at all. If I see an opportunity to trade the upside, whether it's a day trade or anything like that, I'm gonna trade it. Okay, I'm gonna definitely trade it. But ultimately, I guess for lack of better wording, long term, pretty bearish right now. Okay, pretty bearish on the market. I think we're going to see a crazy move to the downside. I'm not even telling you guys everything I'm thinking right now because I don't want to jump the gun. I don't want to create fear mongering, but it can get really ugly, guys. Okay, it can get really ugly. All right, so you don't want to see that. Okay, you don't want to see that at all. That's pretty much all I have for Nvidia. I mean, 103, that's your most important level. You can't see another move towards the upside, towards 120, 122. Right now, it's at resistance at around 116. Actually, this is about we'll say 117. It had a hard time breaking above 117 today. Maybe that or tomorrow, gives it that final push towards the upside. But ultimately, I still think Nvidia is going to see 100, if not lower. Apple. I mean, I give you guys the keys to the city, man. I try my best to give you guys the keys to the city. I've been telling you guys this thing is going to tank for about a good month now. All right, for a good month, I've been saying this thing is going to tank. Here we are. Head and shoulders pattern. Head, shoulder, head. Descending triangle. You just broke the neckline of every freaking thing on this thing. All right. Your last line of defense right now is about 215. We'll say 214.8. You break below that, 210 is on the table. I think we're gonna head there. Simple as that. I think we're gonna head there probably by next week, if not sooner. I think Apple is going to continue to tank. I think if you get below about 215, you're extremely illiquid towards the low 200s. Actually, you're you're liquid towards 197, 198. So yeah, not looking good. Now, if we're talking about the measured move for this head and shoulders pattern, all you do is you measure from the top of the head to the bottom of the previous shoulder. You bring that down to the original breaking point, and you're looking at 180. That's pretty reasonable. That's a pretty reasonable target, I will say. Okay, 180 is very reasonable. And crazy enough, guys, crazy enough, there's a gap fill right there. I don't make this stuff up. Okay, I don't make this stuff up. Insane. The measured move for this head and shoulders pattern, crazy enough, is this gap fill at 180. I mean, that's crazy how that just lined up. All right, crazy how that lined up. All right, so you guys let me know what you think about that in the comments below. But ultimately, still bearish on Apple. Don't care what anyone says. It has no incentive to pump to all time highs or anything right now. I think it's going to continue to drop. You're going to probably see some bounces along the way, but ultimately this thing is going to continue to tank. Simple as that. We jumped into in the Discord. We jumped into what did we jump in? We jumped in 170 puts. We jumped into like 170 puts all the way when Apple was at like 240, between 240 235. Still in that play. We're in long dated contracts for this, so we're in 170 puts. This head and shoulders plays out. We're getting a nice little bag. All right, so that's our long term position on Apple. I trade what I say. I don't just say things on this channel and not trade them. I trade mostly everything I say on my channel. Okay. If I'm not trading the SPY because I think the SPY is bearish, then I'm trading something else that's bearish. Okay. Regardless, I trade my thoughts. Okay. I'm not one of those YouTubers that says something's gonna happen and I don't trade it at all because I'm scared or something or I don't want to be wrong. Right. So that's just me. All right. Apple, yeah, got nothing for you when it comes to upside. As far as a retest, you might get a retest towards about 220, right? Let's actually go to a smaller time frame. I'm sorry, guys. I'm always looking at the daily time frame or 4 hour. Yeah, you might get a nice little retest, if anything, maybe get something like this at around 218 at max, maybe this 220. Ultimately, yeah, GG's. Anyway, yeah, moving on. Tesla, you guys keep asking me about Tesla. Is this the bottom for Tesla? Absolutely not. It's not. It's not the bottom for Tesla. As long as Tesla stays below 270, pretty bearish on it. Okay, it's having a hard time getting to go up to 50. Personally, I wouldn't be surprised it gets above it, a little bit above it, but 270, your main level here. Why 270? I mean, right here, guys. All right, let's lock in. I'm about to show you guys something crazy in a bit, but here, boom, boom. You want to get above these guys here if you want to be bullish on Tesla. Around 270, 273. Then after that, you get pretty liquid towards 290, max 300. So yeah, but ultimately, yeah, Tesla still doesn't look good. Right now, you keep smacking against this wall at around 250. So right about here, you keep hitting this wall here. So yeah, we'll see what happens. But ultimately, yeah, Tesla still looks bearish as long as it stays below 270. Now let me show you something. Let me show you guys something real quick. Just in case you don't believe me, just in case, I tell you guys all the time, you ain't got to believe me. But when it comes to these guys, Tesla, we're going to look up Tesla and what institutions are doing when it comes to Tesla. March 11th. This was yesterday. I'm not touching this thing. I'm not touching Tesla. I'm not touching it. After I saw this, I was like, yeah, I'm not touching it. Not touching it. I'm gonna leave Tesla alone. Alone. I don't care how far dated these contracts are. This is absolutely insane. What are we talking about? March 11th, yesterday. Okay, this was around 12:55 Eastern time. Scroll over, Tesla, August 15th is the expiration, 170 puts. They were loaded up at 227.83. Somebody's going to be like, oh, they're getting crushed. They don't care. Okay. They obviously don't care that they're getting crushed. All right. What's getting crushed to us, a lot of you look at what institutions are doing and you look at where they get into their positions. What's getting crushed to you is not getting crushed to them. So $1 million or 50K, them losing 50K on a trade sounds like a lot to maybe you, but to them that's pennies. Okay, that's penny. We just watched the institution the other day in the Discord load up 38 million on a play. So yeah, a drawback to a 50K, 100K, 500K drawback to them is probably pennies to them. Okay, I'm just gonna say that. So moving on. All right. They were loaded up at 227.83. I mean, we scroll over. They were loaded up at the ash. You got 10 million premium, 7.88 million premium, 3 million, 2 million, and then it's not just one institution. It's multiple institutions, guys. I mean, there's another one too, somewhere around here. Hopefully I click on the right one. Is it? I think it's this one. But yeah, I mean, it's like yeah, I'm not touching this thing. I'm not touching Tesla. You guys keep asking, should you trade Tesla to the downside? Should you trade it upside? I don't care what you do. I'm not touching it. I'm just not. I'm not chasing Tesla. We made our money off Tesla already in the Discord. We traded puts on Tesla. We did our thing. We took one L within last 3 weeks off Tesla. I'm not messing with it anymore. It's made its move. Again, Tesla, August 15th expiration. I don't even care if that's a far out expiration. I don't care. 170 strike, loaded up at 226. You scroll over. I mean, they doubled down on this play. 5.8, 18 million, 3 million, 3 million. I mean, the list goes on. Even more institutions, exchanges, whatever you want to call them. Not touching this. 170, um, yeah, we scroll in, we look, right? What is happening? What am I doing? You still have a gap fill all the way at 150. Is is that surprising? Like someone literally laughed at me because I said Tesla can go to 150. Cool. Laugh at me. You gonna laugh at these guys? The guys that's like 20 times richer than you? By all means, buddy. But regardless, yeah, I got nothing for you when it comes to Tesla as far as upside. As long as it stays below 270, I think it's pretty safe to say it's going to continue further down. All you did today was bounce off this gap fill. Pretty normal. Gaps have very strong support and resistance. Right now, 250 is the next um gap area. Like I tell you guys all the time, gaps have very strong support and resistance. So right now we're pretty much at a strong resistance right now when it comes to Tesla. We'll have to wait and see. But again, below 270, pretty bearish on this thing. All right. And that's pretty much all I have when it comes to this video. Let me know what you guys think in the comments below. Do you agree? Do you disagree? I think it's clear that I still don't think the bottom is in, despite whatever dead cat bounce rally we get. I still don't think the bottom is in, guys. I think we're going to see a lot more downside. When that happens, I can't tell you. Okay, I honestly can't tell you. But tomorrow we have more data. Hopefully, you guys are following the same things I talked about yesterday, where you want to wait 30 minutes after open, okay, before you start trading news, because the same thing that happened yesterday can happen today. Well, not yesterday. Today can happen tomorrow. Did I say that right? Yeah, I think I said that right. But yeah, you can easily get trapped all over again. Okay, you can easily get trapped all over again. We pumped all the way to 564 in the SPY. Immediately they gave it back. Immediately. I mean, IWM was probably worse. I mean, this was insane. IWM pumped all the way to 206, gave it back as soon as the bell rang. As soon as the bell rang, it gave it all back. So somebody probably got cooked off that. Other than that, until the next video.